It's been an interesting few weeks for the markets with, at one point, the Japanese index falling at least 12%, the biggest fall since 1987. US interest rates kind of falling in terms of the bond yield, starting to fall quite sharply, and calls for an emergency meeting by the Federal Reserve to cut interest rates by 50 basis points ahead of the scheduled meeting in September. We've had the yen carry trade. We've had lots of different factors which have pulled markets down. But there's India market being very resilient. We're now looking at India as a low beta market, and we fell, half of what we saw in the US markets, and recovered most of that back since. So that's the good news, is that India is seen as a safe haven, defensive type of market. But where do we go from here? Because valuations still remain very stretched to my mind, and it's very difficult to kind of push forward on buying some companies on earnings of P's of over 100 when the orders are still yet to come in. The earnings season has been quite poor actually for this quarter. Most of the companies we've seen the combination of both earnings being revised downwards as well as price targets. So there's no real catalyst at the moment for markets to move higher. I'm saying this really in the shorter term, maybe this month of August, which is usually a pretty volatile month, as we've already seen. But what do we have to look forward to? Well, there's two things. First, the US should reduce interest rates in September. Now, the debate is still whether it's 25, which is our 25 basis points, which is our base case, or maybe 50 basis points to alleviate the market's worries about a bigger slowdown coming in the US. Whichever way it is, we think that the RBI then could have the opportunity to reduce interest rates in their October meeting. It's either going to be October or December, but October, I think the markets will start to say, yes, they have the ability to do that. So that would be good news. That will help the economy going forward, as well as corporates. And it might just kind of help earnings kind of stabilize a little bit more than where we are today. So that's the first point. The second point is, why would that have a big impact on markets? So I think it's good for the banking sector. We all know that NIMs, the interest margins have been under a lot of pressure. So a falling interest rate regime, not just in October, but going into 2025, should be good for the banking sector. And the banking sector is around 30 to 35% of the Nifty Index. So that should pull up the whole of the market. So we could see a better rally, from where we are today, or a push higher, towards September, October, as the interest rate environment starts to play out in terms of lower rates. Do I think that is going to be a rally like we saw last year? I think we've already kind of seen a near 10% kind of increase in the market up until recently, and I think 15% from April the 1st to March the 31st is what we're expecting in terms of the market to rise, and that's in line with earnings growth. So that's where we are today. So expect August to be a little bit more volatile, to remain volatile into the interest rate cuts coming in globally in September in the US, and then locally here maybe October, which should be good for the banking sector.